Have you ever felt like wealth is happening all around you, just not to you? Like you're working hard, doing everything right, yet your life never seems to break into the next tier? It's a strange kind of frustration, watching others level up quietly while your own progress feels microscopic. But here's the uncomfortable truth most people never hear. Rich people aren't lucky. They're following a structure you were simply never shown. And that missing structure changes everything. Maybe this sounds familiar. You're grinding through your days, saving where you can, trying to make responsible decisions, but your results don't match your effort. I get it. I've been there too. My name is Alex, and I spend an unreasonable amount of time studying how ordinary people quietly climb from zero to financial freedom. Not through hype or shortcuts, but through systems. Predictable, repeatable steps anyone can follow once the blueprint is finally visible. So let me ask you something. What if the problem isn't your discipline, but the roadmap you were handed? What if wealth has always been a staircase and no one ever showed you the steps? Today we're breaking down the real 15-step wealth framework proven for decades, and at least one of these will snap something into focus. Step number 1, establish a real financial target. Most people say they want to make more money, but that phrase is so vague it might as well be a fortune cookie. Your brain can't chase a blurry target. Wealth begins the moment you give your life a direction sharp enough to pull you forward. Not a dream, not a wish, a number with teeth. Think of it like trying to hit a bullseye in the dark. You can throw effort, motivation, and hope at the target all day, but if you never turn the lights on, you're just guessing. Rich people don't guess. They define. They set specific, measurable goals that actually change their behavior. When you know exactly what you want, procrastination becomes uncomfortable. Netflix becomes less tempting. You start reshaping your evenings around progress instead of distraction. The key is choosing something small enough to feel achievable, but big enough to feel slightly uncomfortable. That discomfort is important. It tells you you're stretching. For example, I want to earn $1,000 a month from a new project by December 31st. Suddenly, the brain wakes up. It starts looking for paths, opportunities, and shortcuts. Clarity activates creativity. Your first real financial target isn't about the dollar amount, it's about proof. If you can earn $1,000 without a boss, you've unlocked the most important belief in wealth building. I can create money on my own terms. Once that clicks, the ceiling rises, 5,000, 10,000, 50,000. Every wealthy person you admire started with something tiny and then stacked it. Set the target. Make it real. Everything begins here. Step number 2, reverse engineer the target. Once you've set a real financial target, the next step is to take all the mystery out of it. Wealth isn't built on ambition alone. It's built on math. Clear, boring, undeniable math. Reverse engineering is how you turn a big, intimidating goal into a simple checklist your brain actually knows how to execute. Most people stare at the outcome. I want $1,000 a month and stop there. But wealthy people break that number apart until it becomes impossible to misunderstand. 10 people paying you $100, 20 paying you $50, 100 paying you $10. Same destination, different roads. And suddenly the goal stops feeling mystical, it becomes mechanical, then you keep going. What product or service is worth $50 to someone? How will they find it? How will they pay you? What needs to exist first? A simple offer, a landing page, a payment link. Every financial outcome is just a long chain of small, unglamorous tasks linked together. When you reverse engineer, you're simply laying those links on the table so you can see them clearly. Think of your goal like a machine. Reverse engineering is how you open the casing and study the gears. You learn exactly what has to turn for money to come out the other side. No guessing, no hope, just steps. This is the moment your dream shifts from imagination to logistics. And logistics are buildable. Break the goal down until the path feels inevitable. Step number 3, build the skills that turn ideas into income. Now that your goal is clear and the path is broken into steps, you hit the part where most people quietly tap out: skill building. Not because they're incapable, but because learning feels slow, humbling, and uncomfortable. But here's the truth. Wealthy people understand early, skill is the one asset that compounds faster than money. Whatever you're trying to build, someone has already done it. There are books, videos, courses, interviews, entire ecosystems built around the exact problems you're trying to solve. Your job isn't just to consume that information, it's to absorb it with intention, learn the patterns, learn the mistakes beginners always make, learn the tools, the shortcuts, the workflows. But information alone won't move the needle. You can't read your way into making money. You have to touch the work. You don't learn design by watching a tutorial. You learn it by creating something ugly and improving it. You don't learn selling by studying scripts. You learn it by talking to real people and getting real rejection. You don't build expertise from theory, you build it from repetition. Think of skill as your personal set of multipliers. Every wealthy person you admire has a toolkit they built long before the results showed up, skills that let them execute faster, think sharper, and solve bigger problems than the average person ever will. This stage is where that toolkit begins. Practice until something clicks. Because once it does, your earning potential changes forever. Step number 4, work. Every single day. This is the step where the idea stops being exciting and starts becoming real. Up to now, everything has lived in your head. The goal, the plan, the skills. But none of that matters unless you show up every single day and put in the reps. Not dramatic work, not 12-hour grind set days, just consistent, unglamorous, repeatable progress. Think of your goal like a giant block of marble. You already know the statue you want to carve, but the only way to reveal it is to chip at it daily. Some days, you'll knock off a big chunk. Other days, you'll barely scratch the surface, but the only way to fail is to drop the chisel. The early phase is the hardest because you're pushing against inertia. It feels like nothing is happening. You question the idea, the timeline, and sometimes yourself. That's normal. Momentum is invisible at first, but if you keep showing up, you eventually hit the moment every builder remembers: your first small win, the first client, the first sale, the first dollar that didn't come from your employer. That tiny win hits harder than you expect because it proves the system works. And suddenly the work feels different, not easier, just real. This step isn't about motivation. Motivation is unreliable. This step is about discipline, doing the work on the days when no one is cheering, no result is visible, and quitting feels logical. Work daily, not perfectly, just consistently. That's how momentum starts. Step number 5, move the needle with high impact action. At this stage, you're working every day, which is great, but now comes the real separator between people who stay busy and people who build wealth. Wealth isn't created by motion, it's created by movement, and those two things feel identical until you look closely. Most people stay trapped in productive procrastination. They tweak designs, reorganize files, brainstorm ideas, watch tutorials, rewrite plans. It all feels important, but none of it actually pushes the project forward. It's like rocking in a chair, lots of motion, zero progress. Moving the needle means choosing the uncomfortable high-impact actions that change outcomes. If the website needs to go live, buy the domain and publish a basic version today. If you promised yourself you'd pitch 10 clients, send the messages today. If you said you'd launch this month, set the date and hit it. This step is about boldly finishing, not endlessly polishing. You'd be shocked how many new builders get stuck right here. Not because the work is hard, but because the work is uncomfortable. Rejection is uncomfortable. Shipping imperfect work is uncomfortable. But these are the exact actions that unlock the next level. And here's the twist. Once you start moving the needle, overwhelm shows up fast. Messages, orders, tasks, everything hits at once. That's normal. It means the machine is finally turning. Your job is simple. Keep choosing the actions that actually create results. Prioritize impact over aesthetics, momentum over perfection. Do the thing that moves the needle every day. Step number 6, outsource repetitive tasks. Outsource the repetitive work. This is the moment where beginners either break through or burn out. Because once things finally start working, something unexpected happens. You become the bottleneck. Every task flows through your hands. Messages, small fixes, delivery, admin work, customer questions. At first it feels flattering. You feel needed. But very quickly, growth stalls because the business can only move as fast as you can. Wealthy people solve this early. They realize their job isn't to be the worker, it's to be the builder. Their strength is in the 20% of tasks only they can do. strategy, creativity, decision making, vision. Everything else, the predictable, step by step work, must be documented and delegated. Not to experts, not to clones of yourself, just to people willing to follow instructions consistently. Think of your business like a machine. When you're doing everything yourself, you're the one tiny gear trying to spin the entire system. Outsourcing adds more gears. More gears mean more output, less friction, and more speed. But here's the mindset shift. Delegation isn't a luxury, it's a multiplier. Most beginners refuse to let go because they think they're saving money, but in reality, they're sacrificing growth. Rich people follow one simple rule. If someone can do a task 80% as well as you, pass it off. When you free up time, you free up capacity, bigger ideas, better decisions, faster improvements. Outsourcing is how you rise above the noise and finally steer the business instead of drowning in it. Step number 7, analyze and improve relentlessly. With the daily grind handled and repetitive tasks off your plate, your role shifts from operator to navigator. This is the point where wealthy people quietly separate themselves, not by working harder, but by understanding the story their numbers are telling long before their emotions catch up. Most beginners run their business on gut feeling. Wealthy people run theirs on data. Not spreadsheets for the sake of spreadsheets, but simple metrics that reveal what's actually happening under the hood: revenue, cost per customer, conversion rates, fulfillment times, traffic sources, customer retention. Every number is a clue. Every pattern is a signal. Every dip is a warning. Think of your business like a flight. If you're not checking the instruments, you're flying blind, and turbulence will feel like disaster instead of feedback. Once you understand what the numbers are saying, the second half of this step kicks in: improvement. You fix what's slowing you down, you strengthen what's working, you streamline clunky processes, upgrade outdated tools, experiment with better systems, and remove anything draining your time or money. This is also where leadership matters. When you're steering a team, even a tiny one, your clarity becomes their clarity. Your calm becomes their calm. Your priorities become their priorities. Analyzing and improving turns you from someone who has a business into someone who runs one. And around this stage, outsiders start calling you successful, even though you know you're only getting started. Step number 8, live like you're poor even when you're not. This is the stage where momentum silently dies for most people. Not because they lack discipline, but because success finally shows up, and with it comes the temptation to upgrade everything. A nicer car, a better place, new clothes, weekend trips. After all, you worked hard. Don't you deserve it? That's exactly how people drift back down the financial ladder. Living below your means after money arrives is one of the most powerful, uncomfortable advantages you can create for yourself. Middle-class thinking wants comfort. Wealth-building thinking wants freedom. This phase tests which one you really value. Think of your income like a river. If you widen the banks too early, the water spreads thin. But if you keep the channel narrow, the current strengthens, and that current becomes your future wealth. The goal isn't deprivation, it's leverage. Every dollar you don't spend on lifestyle becomes a soldier you deploy into the future, buying assets, building systems, compounding in the background, while everyone else is busy looking successful instead of becoming successful. This is where ego ruins more fortunes than bad luck ever will. Upgrading your life too early kills hunger, reduces focus, and inflates expenses faster than income. And once lifestyle creeps up, it almost never comes back down. If you want to become truly wealthy, you must protect the gap, the space between what you earn and what you spend. Guard that gap fiercely. That's the engine that funds your next levels. Live below your means now so you can live beyond them later. Step number 9, save with intention to invest. This is the turning point where the entire wealth building game flips. Because once you're no longer spending everything you earn, you finally create something most people never experience: surplus. And what you do with that surplus determines your financial future. Most people take extra money and upgrade their lifestyle. Wealthy people take extra money and redirect it toward the future. This single mindset shift separates those who stay comfortable from those who eventually become financially independent. Think of every surplus dollar as a tiny seed. On its own, it looks insignificant, but when planted consistently, that seed grows roots, branches, and eventually a forest. That forest is your wealth, not built overnight, but grown through persistent planting. Saving to invest means you stop thinking, I work to buy things, and start thinking, I work to buy engines that make money for me. It's the moment you stop seeing money as consumption and start seeing it as capital. And the trap most people fall into is believing small amounts don't matter. But savings compound the moment you deploy them. They build resilience. They create financial gravity, a pull that starts working for you instead of against you. Your goal isn't to hoard cash. Hoarded cash dies slowly. Your goal is to save with intention, to create dry powder you can use to acquire assets, build systems, or strengthen your business. Every dollar with a purpose becomes a brick in your future foundation. Save to invest, not to feel safe, but to create leverage. Step number 10, invest to build real wealth. Saving gives you dry powder. Investing turns that powder into firepower. This is the moment you shift from earning money to building wealth, and those two paths lead to completely different destinies. Earning depends on your time and effort. Wealth depends on systems, assets, and time working together quietly in the background. There are two primary types of investments: cash flow assets and appreciation assets. Cash flow assets pay you regularly: rental income, dividends, interest, business returns. They put money into your pocket on autopilot. Appreciation assets rise in value over time: stocks, real estate, precious metals, collectibles, and occasionally crypto, if you genuinely understand the landscape. Both matter. Cash flow gives you stability. Appreciation gives you scale. Real estate is one of the most reliable ways to blend both. Rental income today, value growth tomorrow. But the asset itself isn't the point. The principle is what matters. Don't invest emotionally. Invest intentionally. Learn the rules. Understand the downside. Start small. Build confidence through competence, not speculation. Wealthy people don't gamble. They calculate. They buy assets that survive recessions, job losses, and market swings. They focus on durability over drama. The purpose of investing isn't to look smart or brag online. It's to build a foundation that keeps working even when you don't. A safety net that protects your life's trajectory no matter what happens in the economy or your industry. When your investments begin producing income without your involvement, you're no longer chasing money, you're partnering with time. Step number 11, reinvest in the business that built your momentum. By the time you reach this stage, something interesting happens. The business that once felt fragile now feels stable. Money comes in consistently, investments are growing. Life has more breathing room than it's had in years. And ironically, this is the exact moment many builders drift off course. Because once investing feels exciting, the business suddenly feels less exciting. But here's the truth: wealthy people never forget. The business is the engine that got you here. Ignore the engine, and the whole machine slows down. Reinvesting isn't about spending money randomly, it's about strengthening the core. A simple rule of thumb most successful founders follow: half of your profits go toward investments, and half go back into the business. Better tools, better infrastructure, better marketing, better people, better systems. Every improvement compounds. Stronger operations create smoother fulfillment. Better tools reduce friction. Better team members increase capacity. Each upgrade becomes another lever that multiplies your long-term output. You can scale vertically, improving your main offer, raising quality, raising prices, or increasing volume. Or you can scale horizontally, adding complementary products or services. Both work, but only if you stay focused. Because the real danger at this stage is distraction. Shiny new ideas appear. Other ventures look tempting. People offer opportunities that feel exciting but pull you away from the vehicle that actually works. Reinvesting is about fortifying the foundation so everything else you're building stands on solid ground. Protect the engine. Strengthen it. Your future wealth depends on it. Step number 12, find a mentor who's already done what you're trying to do. By the time you reach this stage, you've proven something important. You can build, sustain, and grow something real. The business works, the numbers make sense, you've survived early mistakes, But now you're entering deeper waters, and this is where experience becomes priceless. You can keep figuring everything out alone, slowly and painfully. Or you can shorten the learning curve by standing on someone else's shoulders. A mentor isn't a cheerleader or a motivational figure. A mentor is a GPS. They've walked the path you're on. They know where people get stuck, where the potholes are, and which opportunities are actually traps. When they speak, they save you months of confusion and thousands of dollars in avoidable mistakes. The goal isn't to copy their journey, it's to absorb their thinking, to see patterns, risks, and strategic moves you can't see from the ground level. Good mentors challenge you. They correct you. They tell you uncomfortable truths when you start drifting. And most importantly, their standards force you to raise your own. But here's the part most people miss. Mentors help people who help themselves. They want someone serious, disciplined, and already doing the work. They don't respond to shortcuts or wishful thinking. A single conversation with the right mentor can change your entire trajectory, not because they give you secrets, but because they give you clarity. At this level, clarity is worth more than capital. Find someone who's already where you want to go. The guidance is worth more than any mistake you'll ever make alone. Step number 13, build a network that pulls you upward. By this stage, you're no longer building in isolation. You've proven you can create, grow, and sustain something real, which means you're finally ready for one of the biggest wealth multipliers most people never access: a strong, aligned network. Not a social circle, not acquaintances. A room filled with people who think the way you're learning to think: long-term, strategic, and opportunity-driven. At higher levels, wealth stops being a solo project. It becomes a network effect. Successful people naturally gather around each other because they share similar responsibilities, similar problems, and similar goals. And within these rooms, something subtle but powerful happens. Information moves faster, opportunities appear earlier, and trust builds more naturally. But here's the key. A great network isn't built by taking. It's built by value. You show up with integrity, clarity, and generosity. You contribute insights. You share resources. You help solve problems without expecting favors in return. Over time, you become someone others can rely on. And in high-trust environments, reliability is currency. A strong network protects you when things get rough and accelerates you when things go well. Need advice? Someone's been there. Need a partner? Someone's interested. Need a door opened? Someone knows the person who can open it. You rise to the level of the room you're in. Surround yourself with people who build, think, and act like the future matters. And you'll grow to match them almost automatically. This step changes your horizon. You stop walking alone and start moving with momentum that isn't just yours. Step number 14, to leverage your network to scale and diversify. By the time you reach this stage, your circle isn't just social, it's strategic. You're surrounded by builders, investors, analysts, and operators who think long-term and move with intention. And something powerful happens inside rooms like these. Opportunities begin to multiply. Not because you suddenly became lucky, but because access changes the entire game. Up until now, your wealth has been driven mostly by your own effort, your business, your decisions, your investments. But inside a strong network, the ceiling rises. You gain access to larger plays that would have been impossible alone. Bigger deals, smarter partnerships, safer risks. One person finds a real estate opportunity. Another brings capital. Another brings expertise. Together, you unlock something none of you could touch individually. This is how wealthy people scale sideways, through co-investing, co-owning, and sharing the weight of bigger opportunities. Instead of buying a single rental property, the group acquires an entire building. Instead of starting a tiny side project, the group buys an existing business. Instead of taking on all the risk yourself, you spread it across aligned, capable partners. But here's the key: you don't diversify with everyone. You diversify with the people who have proven themselves, the ones who follow through, think clearly, and protect the group's reputation. Trust and alignment are the foundation. This step widens your financial horizon. You stop playing the game alone and start plugging into collective intelligence, capital, and opportunity. At this level, wealth becomes less about effort and more about access. Step number 15, sell the business and start again, bigger. This is the moment the entire journey has been quietly building toward. After years of discipline, systems, refinement, and growth, Your business finally becomes valuable, not just to you, but to the market. And now you face a decision that feels both exciting and uncomfortable. Do you keep milking the cash cow? Or do you sell it and elevate your life to a completely new level? Wealthy people choose the exit far more often than you think, not because they're tired, but because they understand timing. Every business has a peak value window, usually between years 7 and 11. During this period, bigger players, competitors, or private buyers start paying attention. They're not buying your product, they're buying your systems, your brand, your customer base, your momentum. An exit can feel surreal. A number you once thought was impossible suddenly sits in your bank account. But selling isn't surrender. Selling is upgrading your starting line. With one exit, you unlock time freedom, financial safety, and the ability to design your next chapter from a place of strength, not survival. And here's the paradox. Most entrepreneurs don't retire after selling. After 6 months of relaxing, the same spark that built the first business comes back, but now it's paired with experience, capital, confidence, and a network you never had before. This is the transformation point. You're no longer building to survive. You're building because you can change your trajectory and maybe even your industry on your own terms. Key takeaways. Wealth is a sequence, not a mystery. When you zoom out and look at the full 15-step journey, the pattern becomes crystal clear. Wealth doesn't appear out of nowhere. It accumulates through structure, discipline, and steady execution. Every step you took, and from setting a real target to reverse engineering it, building skills, and showing up daily, moved you away from randomness and toward intention. You learned that clarity beats ambition, systems outperform motivation, and consistent action outlives talent. You saw how living below your means creates leverage, how saving with purpose fuels investing, and how investing shifts your life from active effort to quiet compounding. You also discovered that your network becomes an acceleration engine, not a luxury. The right people open doors you can't open alone. And when you reinvest wisely, improve constantly, and eventually sell at the right moment, the entire trajectory of your life changes. But the real transformation happens internally. Patience replaces panic, strategy replaces guessing, and resilience replaces doubt. Wealth stops being something other people figure out and becomes a staircase you can climb deliberately. Follow the structure long enough and the results stop being surprising. They become inevitable.